All right, we're live. How you doing, Kevin?
Great to be here, Matt. Wonderful idea.
I am so excited to have my friend Kevin. Well, first of all, where am I talking to you at? I see you have the Mr. Wonderful uniform is on.
Yes, I'm in my Miami prison right on the beach here. I haven't moved like anybody else in about 4 weeks. It's been pretty interesting. I'm getting a lot of work done like you are, I'm sure. But it's primordial to see a beach that hasn't been empty for probably 200 years. And as a result, the pelicans are back, the sharks are back. Crazy stuff is happening out here.
That was interesting. I remember in the early days of this of pandemic, you were posting. There was a sort of a leading indicator, right, of the tankers in queue out
Yeah.
in the distance. Is that still the case when you look out your window?
Now it is a giant mega yacht parking lot of cruise liners as far as the eye can see. It is an extraordinary view. It is the index. Clearly, that industry is suffering more than probably any other travel destination industry. These ships are run by 15 people, I've been told, and there's groceries brought out to them every day on a little boat. They're out there for the indefinite period.
That's amazing. Well, so I have so many topics I want to talk to you about. I want to sort of crack open that brain of yours, and we can cover any number of different things. And I plan to do it. But first of all, I've been thinking about you and your watch collection actually during this, and wondering, even though you're quarantined, do you still get a chance to sort of throw on a watch every day to maintain your routine, or is that out the window?
Absolutely.
Here we go.
I'm just reviewing a very, very, very rare piece. I'll show you right now. This is a black face FP Journe Optima, incredible piece. Yeah, I mean, I don't know how many in the world there are of these, but I enjoy this industry so much, and I have a great relationship with so many of the makers now and the brands, and this is I'm doing a whole thing on watch dials. That's an extraordinarily complex dial, and so I'll be publishing it next week, but. It's one of those hobbies that just keep peeling the onion, Matt. And as you know, how much I love watches, that you just get deeper down the rabbit hole. I mean, it's a crazy hobby. Very bad disease, very expensive.
No, it is true. I don't want to ruin your rep, but one of the, we've gotten to spend a lot of time together through Shark Tank and just hanging out. And a few things I've always found, really admired about you is the way you just take life in. I mean, you're always down to get together or socialize. You're always open-minded. You take your passion, your hobbies to a whole nother degree. Some might say insanity, but you live life well. And so, one question I had for you, because you're such an optimistic person, getting through this pandemic, has that been a key part of your success? Just the way you remain open-minded, and how do you stay open-minded, in dark days like this?
Well, today's a good example, Matt, of how I get up at about 5 in the morning and do some work on my European investments, which also have big issues over there. And I'm a balance sheet bond guy, and I have businesses like O-Shares, which is an indexing company, an ETF company listed on the New York Stock Exchange. Those things eat up my time as well. But everything's different. Everything has a different issue. What I'm finding is now, as we grind into this, that it'll be a new normal when we get out the other end, and I can't wait to hear your observations on the restaurant industry, the sports industry where people gather. We desperately want to get sports back, but I don't know how that's going to work in the short term. So I spend a lot of my day making really hard decisions about capital allocation. Which companies do I keep alive, and which ones that are at least in my control do I know can't make it? These are really tough decisions, and I think we got to be honest with each other. There was a company in Oklahoma I have that their bank wasn't even open, couldn't even talk to them about the PPP loan, and we needed $73,000 like that. So I had to helicopter that in, or just lose out on the investment completely. So I mean, it's kind of each day, and at the end of the day, boy, do I ever need a Chardonnay and watch the Sharks eat the Pelicans. It's just...
Well, I'm finding that too. I find myself by the end of the day so emotionally draining, because I have spent every single day of the last 4 weeks dealing with the most weighty decisions that 2 months ago, if you and I were together or we were at the Super Bowl, I never would have thought possible. And these are life or death decisions about whether a company is going to stay alive. And I find it interesting, different characteristics of leaders are on display, and they sort of fall into categories. There's the leader who identifies that the problem is on the horizon, and they don't need to wait for evidence in order to act. And that leader is making some of the hardest decisions of their lives before it's too late. And then on the other end of the extreme is someone who just wants to put their head in the sand and rely on the most optimistic, projections that were from 3 months ago and assume everything's going to come back. And I think that group is the one that I'm most worried about, right? The leader who can't just, manage to the worst expectations and sort of just deal with it in advance, because they may recover before they may never recover. I don't know what you're finding in your portfolio.
Well, what my experience over the last 4 weeks has been that, unfortunately, this is the case. You just have to be honest with people. You have to deal in the brutal truth. It's great to be optimistic and do kumbaya, but these are extraordinary times, and you have to assess the probability of outcomes. And there are certain situations the outcome is going to be a zero, and there's nothing you can do about it. You can't. It is what it is. And I find what I'm finding is, even though it's emotionally draining, people appreciate the honesty and the truth and the facts being put on the table and being dealt with, even if it can only be in 20-minute conversations. I'm using every single video platform there is to talk to all these different constituents and helping them any way I can. But I'm always been an optimistic person, but I'm finding it's truth-telling time.
Yeah. Well, you're the one to deliver the truth. You don't sugarcoat anything.
But now it's life and death truth-telling, and it's really tough. And you're right. Some days at the end of the day, I'm just exhausted, and I went, wow, that was brutal. And every day there's an optimism. Something good happens too. That's the nature of entrepreneurs. That they face tremendous adversity, and then some green shoot comes out of it, or a beacon of light, or whatever, and that just keeps you going.
Well, that's been my advice too. As much as you have to be honest with yourself, don't become pessimistic and give up hope that you're going to find some silver lining. You have to exhaust every possible opportunity in survival mode. We have a company who just launched consumer products, 2 weeks prior to the apocalypse, basically, and they're selling their product all over the country, and they've had to shut down their stores, but one door closed and another one opened. And so my advice too to founders in the survival mode is, be scrappy, go back to basics too, and just look and see if there is a way before you sort of throw up your hands or try to build what you had before. Ask yourself, if you were launching your business today, what business would you build?
Yeah, you bring up a good point. I was just on a call before I joined you with a hardware product, one of my Shark Tank deals, actually, that I've got a lot of money tied up in, that was primarily a retail distribution product for the last 2 years, quite successful, actually. Now we have Walmart that's still open. We're going to move to start selling this week on QVC, and we're going to reprime a relationship with Amazon that we didn't want to have before because the retailers are unhappy with that distribution that they were competing with. The company's BenjiLock. It's the only fingerprint.
BenjiLock. Wow, my favorite pitch on all of Shark Tank. You hugged the guy at the end, and you said, he was a janitor, right, from the Bronx, and you said, I'm gonna make you a millionaire. I don't know why I know this. You said, I'm gonna make you a millionaire.
It's funny you mentioned that. I happen to have one right here. I went on QVC remotely with this product, and it sold out.
I love that thing. Yeah. So smart.
It's so smart. It's a brilliant idea, but the point is, we never had that distribution before. We have to get it because all our retailers are closed, and I have to reintroduce Amazon. I can't wait for all the retailers to open up because I have no idea. So we were on with Robbie and our manufacturing partner, Hampton Locks. I mean, we're scrambling, Matt. We're scrambling like everybody else is, trying to figure it out.
Getting it done. Well, that's interesting. All the, especially, I do a lot in DTC. I teach at HBS on the topic, direct-to-consumer businesses. There was definitely a love-hate relationship with Amazon because of their market power, their tendency to just rip things off, like what they did with, Allbirds, basically copying the shoes. Fast forward, Amazon is a lifeline, right? I mean, it's definitely.
They're beyond a lifeline now. I mean, yeah. I think the new normal is you're going to have to deal with them. I have another company that was, it's not allowed to use air freight. I don't know if you remember this one, another Shark Tank company called Boost Oxygen. Of course,
I got it. My daughter gave me it for Christmas, and I said, "What am I supposed to do with this?" I don't know.
Boost Oxygen. I need a good blast of it, but the point is, this can't go by air anymore, but because of the benefits of pure oxygen, their sales are up 400%. And now my challenge is, how do I get physical distribution? Because I can't airship to anybody. So I'm putting that on QVC too, and trucking it to people. I mean, I've never seen a period like this where it's going to teach a lot of great things about entrepreneurship. You're going to learn. If you didn't pivot, you're dead.
100%.
Yeah.
Let me just big picture. Let me put on your ETF hat and your stock market hat. I don't get this optimism that we're going to have an immediate V-shaped recovery. And if you look at any of the recoveries prior to, there's usually about 5 mini rallies and false bottoms and whatnot before you get to the dead cat bounce. I'm curious. But 18 times more than I ever will. What's your take on the market generally in the economy?
You bring up a good question. Why is the stock market? We basically went down 34% and retraced. We went back up 21%. It's incredible, and why? And so I have a different theory than a lot of other people. What's occurring here is, generally speaking, if you're an institutional investor, a sovereign wealth fund or a pension, I was going to say that you generally would be managing capital long-term, 50% bonds and 50% stocks. And so if you're a giant pension plan for an airline or whatever, you have to make 5 to 6% a year. So here's what I think is happening. Here you have a situation where bonds for the last 27 years have done nothing except make you money in capital appreciation as interest rates went to zero. And in the last year, you've made 14% of your bond portfolio. I benefited from that too. But now when new money comes in, I have to make a very tough decision, and it's a unique one. I can't make 5% in bonds anymore. I don't care if you buy the government's 10-year or 30-year. You're making 58 basis points on a 10-year bond. But here's the new problem, Matt, that I want everybody to think about. In your life, we have never poured $2 trillion into the economy from a helicopter, and then probably another $2 trillion in the next 11 months. That's $4 trillion of free money. And in any other time in history, that would have caused massive inflation. Inflation kills bonds. If you buy a bond for 10 years at just over half of 1% interest, and inflation comes in, you get slaughtered. You lose 20, 30% of the value of that bond while you wait a decade to get back your principal.
Right.
What my assumption is, it's a long answer, is capital is going back into the equities of the S&P because you can make at least 2.5%, 3% in a dividend. And that's why the market has come back so quickly. What was about to go into bonds, most people are looking at it the way I am, saying, I'm going to reduce my allocation to fixed income, bonds, government bonds, and put them into giant companies with good balance sheets, because I'm going to get slaughtered when inflation returns. At least I have pricing power, corporate pricing power. That might explain this insanity that we've seen, these violent 13% days.
Right.
There's no other explanation that I know of that would occur, because earnings are going to be down 33% this year. Anyways, it's an explanation. The only answer is you got to stay long. You can't time the market. You would have missed 2 years worth of returns in one trading session last week.
Well, let's talk about that, because I got a bunch of questions from people asking, since we're on the stock market topic. Regardless of the swings, who do you think are the long-term winners? I have a couple, but I'm curious to hear what you think.
Well, stock picking is very tricky, but I'll give you an example.
But fun, but entertaining.
What I've done is I've been developing actively managed indexes. One of them is called OUSA, and all it does is says, I don't care what sector I'm looking at. Let's say I look at energy. I only want to own the balance sheets. I want the best balance sheets in a really crappy sector, because I don't know when the sector is going to turn around. Right now, the best balance sheets in energy would be Exxon and Chevron. So I own those with the assumption that all the other companies are going to go bankrupt, and they are. The guys that issued the single C junk debt to go shale exploring and then got their leases, and now they're going to go to zero. Well, guess who's going to own those? It's going to be Exxon and Chevron. They're going to end up buying all that garbage and be the benefits because they had a great balance sheet. So when energy goes back up to 35 or 40 bucks a barrel, those will be the companies that benefit. That's my thesis, and I do that in every sector.
So I like that.
I own J&J. I own companies that have giant balance sheets. So out of the whole S&P 500 right now, I only own 138 of them in an index called OUSA, which I helped design with FTSE Russell. It's just a balance sheet play. And that's worked for me. It gives me index-like returns, but with the best balance sheets. So when we have down days, I try and don't take as much downside as the rest because I have a better balance sheet than anybody else does.
That makes sense. A couple that I like, just looking at the long-term beneficiaries, I think Take-Two, Electronic Arts, any of the video gaming have seen a huge spike at home with all these. I'm watching my teenage son and all their friends just spend gobs of money on in-game purchases and whatnot. So I think they'll come out a winner, short and long term. I like Amazon and long Amazon with one caveat. Amazon's profits are very overweighted on AWS, right? So I'm not sure with all these companies working from home or going under how if they take a hit. But obviously Amazon is the behemoth that can make money in 10 different ways. So I like Amazon and anything telemedicine, which has been bid up a lot. But I think the telemedicine changes are for good. All the little regulations that needed to be changed in order to facilitate that entire industry during this crisis, those regulations are not going to be unchanged. And I think a paradigm shift that out of all the different ones that may or may not remain, I think that one is here for good. So those are my amateur stock picking.
No, but I would agree with you on the premise, because I'll tell you something. If you look at the global trend of e-commerce and internet giants outside of the US, include the FANGs that you just did, but there's 58 giant companies around the world. And I know this because I just finished working on another index called OGIG, which has way outperformed the S&P because all it has is the companies that you're talking about. The big ones in Asia, the big ones in Europe, the big ones in South America that are capturing this trend of human beings starting to use e-commerce in a way that's never going to change. I don't care if we get out of this pandemic, we're still going to be using all those services the same way we did when we were in the pandemic.
100%.
So there's 58 giant companies. I own them all now. I own the OGIG index. And I like indexes. I like, if the premise works in America, it's going to work in Asia. It's going to work in South America. It's going to work in Germany. So give me those companies too. I want global diversification. I got them.
I agree with you, by the way. This is a little stat for everyone. Prior to the pandemic, only 12.5% of all transactions in the U.S. were e-commerce, even though any younger demographic certainly would think it's higher. I don't know who those holdouts were, but they're not holdouts anymore. So that behavior, I think that behavior has changed for good, and Amazon could benefit. Let's talk about deals, right? I get asked this question. I've been doing weekly sessions with founders of direct-to-consumer businesses asking, hey, I was about to do a raise right before this struck. I got some money soft circled. Should I chase it? Should I be raising money? I just want to hear your perspective on, should you be raising equity? If you can't raise equity, how do you raise money? I know you just did a really interesting deal that I want to talk about, but just generally, if you got a deal, should you be trying to get backing right now?
You can. And this was so interesting. If you recall the last financial crisis, 07, 08, what was born out of there was jump-started Indiegogo. They were the services that came out of need at a time when there was just a complete freezing of capital markets. The same thing is happening in this freeze. There's no venture capital anymore. You can't even get a meeting with the venture capitalists because they're all licking their wounds trying to decide which companies they're going to support, which ones are going to go to zero in their existing portfolios. They don't have room for new ideas. So there's a new emergence. It's called equity crowdfunding. There are several platforms out there. And what I did, I was planning to go into the business myself because so many of my companies needed it. It was created a few years ago by the Jobs Act, which was the SEC saying, let's democratize venture capital. Let's the next Google or Apple. Why can't the average man or woman in America get a piece of that? And the Jobs Act was created to allow for that kind of a transaction, democratizing equity. And nobody really got any traction because they were never able to get enough investors on one platform. And then it's funny you talk about Activision, along comes the co-founder of Activision, a guy named Howard Marks. He was the guy.
I know Bobby Kotick. I don't know Howard Marks. Right, Bobby Kotick is in.
Yeah, Howard Marks was one of the co-founders of Activision years ago. I knew him back in the day I was in the consumer software industry, and he was the first to get scale. He got over 200,000 investors on a platform called Start Engine. So when I was doing my due diligence with my guys, saying who we're going to have to compete with, it was obvious Howard was miles ahead of everybody else. He already had raised 135 million to something like 280 companies. And so Start Engine's working, and every weekend he's raising money for all kinds of companies. So I approached him and said, look, I'd like to get access to your platform for all my Shark Tank companies. And it ended up turning into more of a relationship where I became an investor in Start Engine and a spokesperson and a strategic advisor, and now a big advocate for the whole idea of crowdfunding. Because here's the big difference, Matt. You go to a VC, you got an idea, just an idea. You got a $5 million pre-valuation, you want to raise $2 million. You're going to give up 33% of your deal to one concentrated entity. They're going to stick a bunch of guys on your board. You may get along with them 2 years later, you may not. That's not how crowdfunding equity works. You go out to your customers and say, look, do you want to invest $100, $1,000 in my deal? And you create tens of thousands of investors on your terms. You don't give up control. You have the moral obligation to make the money, and of course you want to, and you do eventually if you're successful. But it lets you do deals on your terms, and you can raise up to $1,070,000, and every weekend somebody is. So if you're interested in that, and I'm obviously pounding the table because it works, it's startengine.com, and we're bringing in companies left and right, and including some of mine. And I want to use the platform because it's working right now when venture capital is not.
So quite a few questions, because I'm fascinated by this topic. So investors, I don't know if you know this, but we can be a real pain in the ass, right? We ask questions, we want rights, and things go south and whatnot. So if you suddenly have a block of 1,000 investors, how does this pool of people, how are you communicating to them? What kind of information rights do they have? I'm just curious where they exist on your cap table, and then, just generally. You just write a check?
You decide what rights they should have. That's the beauty of it. But there's been so many deals done on the platform. There's some standards have emerged, and also you're under the auspices of the Jobs Act. So you're right. Basically issuing this prospectus. And you don't want, you can go back, as things get better, you can go back and keep raising on the platform. So you communicate on the platform, all your shareholders are on the platform, they set up an account on the platform, you communicate as much as you want. I've got a company right now going through the process, and we're working through all the paperwork. We're going to launch for $1,070,000. The people there, the management team and the compliance department are the best I could find, because all I care about is compliance. I'm an issuer now in O shares, so I got to be very careful. I don't want to breach any covenants, particularly with the SEC, and they've done a great job with all of these deals. And so what I've learned about crowdfunding is it's you communicating your story, your vision, your opportunity with thousands of investors, and they make their own decisions individually.
So this has been around, Jobs Act a few years old now, right? So how'd you pick Start Engine versus the 5 competitors that have been out there from in the space?
One singular reason: they're the only one with hundreds of thousands of investors on the platform. Everybody else doesn't have any investors. So if you don't have a winner, right. Yeah, you got a winner that's distanced themselves by miles. And I'm not saying others won't emerge, but for me to catch up to Howard, like sometimes you don't fight and you join him. You know what I'm saying, Matt?
I agree with that. It's so smart that you said this, because a couple of the times when I have gotten hurt significantly is when I saw a great idea and dismissed how difficult it was going to be and said, well, why don't I just create that? This doesn't look that hard. For some reason, that never does work out. Like if you see a sector, it's much better just backing the winner and just going for it.
I called up Howard, said, I'm gonna kick your ass in this space. He said, let me tell you 15 reasons why you're not. And by the time he had finished, I said, please, Howard, can I be an investor?
So let's talk about the other group. I'm about to publish something on this topic too. So I love what you're talking about. Crowdfunding is a viable way to go forward. For the other group of people who are about to raise the money, there's a few pieces of advice. Don't try to approach an investor and pretend that the money that you had soft circled is still there. Like, you've lost the leverage because of the crisis. I get these emails from people, and I say, are you so tone deaf? I got an email the other day. It said, Matt, I'm doing a $500,000 round. I got 300,000 soft circled, the other 200 spoken for, but I want to try to fit you in. I said, fit me in? My advice, if you were going to do $1 million round, do a $200,000 round. Go to Aunt Betty, give her great terms, and if not, go to somebody else. Do a bridge round. Spend the time communicating to investors or folks. Like you always advise, get on LinkedIn, tell your story, eliminate the friction of trying to raise. Also, if you're an e-commerce business, you're a fool to try to raise now, because in 3 months, this is going to be your greatest asset, is how you perform during this crisis. So why would you deny yourself the benefit of that story? Just buy yourself time. But I can't believe some of the delusional emails I get from folks trying to sell me. Like, just be honest, level with me. I'm doing through the same thing that you're going through.
Yeah, there's a lot of optimism out there that just has no basis in reality. All the terms are thrown out the window. All the term sheets are dead. all the deals are back at zero and you have to start from scratch. These are extraordinary times. Good ideas are still good ideas, but because distribution channels have been shut down and changed so violently, assumptions about revenue and cost of customer acquisition are all out the window. So I'm getting calls, we probably get 15, 20 a day now. And the trouble is, whatever deck you're sending me is at least 4 or 5 weeks old. It's useless. It has to be rebuilt for the new reality. I'm not saying I'm not going to invest in stuff. I always do. But, I need to absorb the changes. I'm a quick study, but intuitively it's telling me to pause and wait and see what happens when we come out of this. Because I sense a massive change. Let me give you another example, Matt, something close to you. Real estate. I think there's going to be a permanent impairment on cap rates on REITs because every single one of my companies is doing two things right now. Asking for a 3-month deferment on their rent, and they're getting it from most people. But the one that's bothering me the most as a real estate investor, and I am one, is that most companies have realized they need 30% less square footage to run their businesses now that they can keep people working virtually because they're doing it now. And every one of them saying to me, well, I'm going to renegotiate my lease when I get out of this mess. And, that's going to be a real tough one.
I think what you just hit on, I think, is the number one permanent change that I can anticipate, just taking a step back prior to the crisis. Anyone under the age of 30 thought it was probably obvious that you could work from home and be very effective. Anyone over the age of 30, trending higher the older you got, including myself, had just a general disposition to be against that idea that people need to be in the same place, a resistance to doing meetings like we're doing right now, right? The biggest change that's happened, I think, culturally from a work standpoint is that decision makers like myself, like you, and all over the country are now comfortable using Zoom and communication to do a meeting. Our eyes have now been open saying, wait, why am I spending all this money on travel? Why am I spending all this money on, office space to an extent? Like, why, working from home maybe isn't the devil I thought it was. Like, that is a huge cultural shift that I can't unsee what I just saw. The next time somebody tries to make me get on a plane to go to a meeting in London, for only 2 meetings and then fly back, I'm probably going to say no. And I'm going to say, let's do a Zoom call. So how does that translate to the office environment? I'm not really sure, other than a squeeze of demand, you would think, right?
Yeah, I think it's going to impair probably large office towers, which I own some, not the whole building, but I'm certainly a participant in many. The cap rates were sort of 4.5% AAA office in key centers, New York, San Francisco, Chicago, Miami. Jam 7,000 people into tight workspaces, put 60 on an elevator shaft. I don't think people are going to jump back at that right away, particularly law offices. I was talking to a couple of my lawyers that work for me in Boston, for example, and they've been all working virtually. They don't want to get back in the elevator shaft after signing with their security badge, not with 50 people.
See, I have a slightly different view of that. I think the things that we leave behind are the fear-based, and the things that we embrace that change society are the optimization. So what do I mean by that? I was that 9/11 was the mayor's press secretary and then helped run the redevelopment of the Trade Center site. And I remember at the time they said, no one will ever work in an office tower again. To me, that was a fear-based emotional response. And within 2 years, that had dissipated from society. In the same way here, I think the fear of congregating and being near each other will dissipate when, 1, we have massive testing, 2, we have antibody testing, and 3, we then ultimately have a vaccine. I think that in a year that leaves us behind, but I think what stays with us is any efficiency and quality of life improvements that we were exposed to.
It's a more optimistic observation. However, for the next 2 years, what I've done is take my allocation down from what used to be 33% in real estate vehicles. I'm now down to 12.5%. And I've raised a ton of cash doing that. I don't know if I sold at the right time, but when I had liquidity, I took it, and now I'm redeploying that money into different places. I'm going to wait it out and see what happens. I'm suspect. I'm going to wait to see how much happens on the efficiency side to reduce demand, particularly in second-tier REITs that service strip malls and places like that. So that's I'm just a cautious investor from that perspective. But I would agree with you. maybe masks find our way into our society the same way they find their way into Asian societies. There's one thing that's bothering me that I think we need to address as trading partners. Maybe that's the way I should put it. If it's true that a lot of these pandemics and epidemics are coming from the transfer of certain species, notably everybody suspecting bat on this one, maybe our trading agreements, without selecting any one country or culture, should be, look, if you're continuing to have wet markets that trade in bats, we're just not going to let you fly to our country because we don't know what the next virus is going to be. And you've got to address that, because I need to understand the source of these massive SARS, Corona, H1N1, Ebola. Come on, give me a break. If we know we're doing something wrong, we got to stop.
Yeah, what I'm fascinated by, again, having my background in crisis management, I've been devouring everything, watching as it unfolded. What I think is so unfortunate is if you looked at certain countries, particularly Czech Republic, South Korea, Germany, and Taiwan, Singapore, everyone offered something that America could have borrowed to get ahead of this crisis. So let's say with a little country of the Czech Republic, 10.7 million people, right? Right away, they were the first country to basically close borders, close restaurants and businesses in Europe. Put that off to the side. But they did something very interesting. On March 18th, they announced that every single citizen in the Czech Republic had to wear masks, because they were relying on studies that go back decades that show that masks aren't about protecting they're about protecting the other person from vapor, right? From any kind of virus transmission. That was established science. And by virtue of doing that, within 3 days, the entire country mobilized, and they were producing masks at DIY at home. And all over the country, trees would show up with DIY masks for you to grab. Within 3 days, the entire country was covered. Fast forward to right now, they just opened up their bicycle shops this weekend, right? So if you look at the United States, the Surgeon General on February 2nd said the masks are ineffective. And then the CDC a month later had to reverse itself. So I'm reflecting like,
that's a mistake. We made a mistake. We should have put on masks in North America a lot sooner. I totally agree with that. But here's something else that I have come to realize as an investor. I hope that our policy for North America, Mexico, America, Canada, is that we need to have our own supply side for all these medical supplies forever, and not rely on competitors in other countries for masks and for any kind of respiratory equipment or any kind of special wear that we need for our health providers. This is crazy what's going on here. This is America. And here in Miami, the demand for masks is insatiable. You can't go out without one, and you can't find one. So that's not the right, we got to readjust that. So there's a huge opportunity for supply side management. I'm sure the Canadians will benefit because they have a low cost dollar. I'm sure the Mexicans do the same thing. I'm going to look at all three countries for opportunities in healthcare to be involved in rebuilding the infrastructure for the basic supplies we need to have. Just like we have strategic oil reserves, we need strategic mask reserves, PPH, whatever it is we need, we got to have it.
But putting on your sort of prime minister candidate hat back in the day, right? Just focusing on politics. I feel like there was a failure to skate to where the puck was going during this entire crisis. Were you surprised that we didn't trigger the Defense Production Act to go ahead and order companies to start producing the ventilators and producing the masks weeks ago? Like, we had the power. And I know there was a precious argument about states' rights and creeping nationalism, which in retrospect was complete utter nonsense. Were you surprised that America couldn't mobilize to deal with this crisis?
I would say I go back even farther than that. I want, when this is over, to go back and look at the data from all the countries that were experiencing this outbreak, when they knew it, when they told everybody else about it. The world has to adjudicate itself in a different way. The role of the World Health Organization, WHO, has to change. If pandemics are becoming the new normal, we need a different mechanism. We have social media, we have instant communications, and we didn't use it. I need to know, I don't care what country you are, if you somehow, for some animal, a bat or whatever it is, and you come down with something, we need to jump on that as a global society right away. And we would have saved millions and millions of jobs and hundreds of thousands of lives, and just this chaos because we have the ability to do it. And I think that has to be built into the trade organization and the way we globally police ourselves. That's the big opportunity. That's what politicians now, the United Nations should get together and say, okay, everybody, we're not eating bats anymore. Like that's
a good place to start. So let's go back to so many people out there watching right now who are small business. You know, they're dealing with more practical issues than the lofty ones we're talking about right now. I just want to hear what are sort of the top 3 best pieces of advice that you've been giving, particularly those Shark Tank founders, you know, those small businesses. What are the top 3 best pearls of wisdom you can give us?
Well, I'm giving it to them every day. Number 1, be honest with your employees about your situation. Do not lie to them because they are the DNA of your business. And even if you furlough them or you're not successful in getting a PPP grant, you're getting them back when things normalize. And number 2, and above all, communicate with your customers every day. I have been amazed at the outcomes of some of my companies that have lost distribution in, I'll give you an example, such a basic commercial kitchen. Wicked Good Cupcakes, a very successful Shark Tank company from years ago. It became the #1 FedEx cupcake in America. It grew a huge corporate business. 38% of their sales were to corporations. And that shut off in 1 week. And they went back to their customer base and said, we're in trouble. Our profits are gone and we want to stay open and you've been with us for years. And the customer base stepped up like crazy. Not new customers. Existing customers said, we'll help you out, we'll buy 2 for 1 or whatever it was they did. They've almost replaced 38% of the revenue in a matter of not even 8 weeks. It's been 6 weeks. So I'm seeing a new, almost a Second World War psyche coming into America. Customers care about their companies. They care about these family-run businesses. And I'm trying to communicate with every customer we can to stay alive. It doesn't work for everybody, because so many had 50% or 60% of their sales on Amazon. Well, you don't know who your customer is. There's no way to talk to them.
Yeah.
But in the case where you can, it has worked.
That's great advice. I've been saying too, it's really important to audit, to ask yourself what problems existed before the virus and which ones were created because of the virus, right? Because I've seen some sort of conflating of the two, and that's very dangerous, right? It's very easy to say, the business is now stumbling. My retail, stores are not performing because of the crisis. Actually, your numbers were terrible prior to. So, and that's why that's important, because this is an opportunity to reset, right? Like you shouldn't be rushing to restore stores that reopen stores that weren't performing.
That's a good segue for me to ask you a question. You know the restaurant business inside out, and obviously Momofuku and some of the biggest brands in the world you're involved with. What is the new normal for restaurants when we come out of this? What should I expect? Because, I think about the money I spent each month in just New York, all the places that I built years of relationships with the maitre d's and the owners so I could get a table in places you can never get a table. And I would spend, there were weeks I would spend, I don't know, $20,000 hosting dinners for business. And that's gone. What should I expect the new normal?
Let's talk about different segments, right? So I do think that the ones that were hit the hardest are going to be the business owner who has 1 or 2 or 3 restaurants. Because if you look at the structure of the federal money, it basically gives you 2.5 times your average monthly payroll, right? In the form of basically a loan at 1% interest, and the first 8 weeks your payroll costs are forgiven. So it gives you an incentive to relaunch your restaurant, and those payroll costs for the first 8 weeks, and 25% can be non-payroll. Now, if you're a small entity though, and you don't have a ton of payroll costs, right, that isn't really going to do much. I think that group is especially hit very hard. They are devastated, and I think reopening is going to be a real challenge for a lot of those restaurants. If you look at a group that has more like 20 or 30 or 40, the federal support actually was pretty spot on because of the way that formula worked. They didn't penalize you as long as you had less than 500 employees per restaurant. That same formula applied. So I think the restaurant groups that have multiple units actually are going to have a decent amount of support to get back going. It goes back to my fundamental point I said before. I do believe, and just in my heart, that fear-based issues are going to dissipate as soon as we're told it's okay and we believe in it. So one of the first things, I don't know about you, one of the first things I want to do is go to a restaurant and have a meal. I don't want to do it and catch a virus, obviously, so I need to be reassured that it's safe. I think it's going to be a longer ramp up. I've been looking at what's going on in China and other places that have reopened, and the restaurants have been really slow to come back. So I think the challenge is surviving that bridge 1 year period where people feel comfortable again going out again. And
Is it
unfortunately, a lot of them aren't going to make it.
1 year or 2 years? Because I want to know that I have the antivirus through either vaccine or I acquired it by being asymptomatic. How long is it going to take me to know that?
I think it's going to be 1 year, honestly. I think a couple of things are going to happen. I think that this is just me predicting, when we reopen, we're going to reopen when there's much more widespread testing. I think that's just obvious. A combination of testing for the virus and testing for antibodies. Two, I think as we reopen, I would imagine the most vulnerable population is going to be told stay home for longer so that we can reintegrate, right, and protect that group and reduce the strain. And I think we're still a year away from the vaccine. But at some point, we settle into a new normal where people want to socialize. The last thing that we're going to give up as humans is the desire to socialize with each other. We're going to die with holding on that to the last minute. So I just don't believe that where we get our entertainment, which is restaurants and sporting events ultimately, I don't believe that that's going to fundamentally change. It's just the problem is you have to survive for that year. You know, and I don't know how a lot of these concepts survive.
Very interesting investment thesis. Then I should go buy some Live Nation stock if I thought that that's going to be the case, because you know, a lot of those stocks that service the idea of socializing and entertainment and event-based planning are very attractive to me in terms of the trends. But boy, have they been just slaughtered.
They've been slaughtered. Yeah, I don't believe it. I mean, in my soul, I don't believe that they don't come back. You know, it's just from my experience.
Really, can you survive using the helicopter money from the government, or is your balance sheet strong enough to get through the next 12 months? Is really your investment thesis.
Right, and what I'm saying is that if you had only a couple of concepts, the money from the government isn't enough to really survive. You're going to try to get rent abatements. It's only going to last for a period of time. The other question is, it's almost like a hot potato. Everyone's trying to pass the hot potato. You have the landlord, which gets no sympathy these days, which I understand, but at the same time, those are business owners too, right? All the concepts are saying we're not paying the rent, fine. Or I have business interruption insurance. I'm going to sue the insurance company to say that this is covered. That's happening throughout America, right? Where restaurants. I can see you.
I can still see you, but it might be a signal, Matt.
Well, why don't we end on this note? We covered a lot of topics.
That's fantastic. Thank you, my friend.
Great to have you. All right, thank you. I'll see you soon.
Take care. Bye-bye.
Take care. All right, bye-bye.